Hello everybody, Corey here. In this video we're going to go over the trades and holdings for the YieldMax ETFs and YIELD. You might hear a little bit of rain in the background as I'm sitting on the balcony again today from the condo in Orlando, Florida. Which again is the reason why the video is late, because I was extremely tired last night, and with family I could never break away to get the videos done, and then I was too tired once I did. And then unfortunately this morning I didn't wake up until the market was opening, so I was doing just a little bit of trading there. So anyway, just a reminder, I'm not a qualified licensed investment or financial advisor. YieldMax ETFs are extremely risky. Make sure you've read the prospectus and have read through all the risk and understand what you're investing in before doing so. All right, so I didn't look here. We're good until Nefli. Okay, so let's go to our holdings. So we're going to start with Abney here. I don't do this often as I usually forget, or I'm usually too rushed. But if you are new and, not totally sure about the short calls and synthetics and where you want them to go and everything else, I at least try to help with the color code. So like the differences with the greens. Right now, these are good, right? They're green percentage numbers. And then you can see where we were at close yesterday at 151. So, you can tell with the synthetic, we're happy, we're green, that the stop price is above the 145. And then for the short call, we're green or happy that the short call is below the 155 strike price, which is about 2%, right? And that's what we're looking for on all of these, with the exception to the short, the ones with the short puts, which are FIAT and crash. We're wanting that stop price to be in between the synthetic and the short call. And then FIAT and crash are the opposite. All right, so here for Abney, we have that short call that will expire this week. And this would normally be red, but honestly, I just haven't done my color codes this week, and I'm towards the end, so I'll wait. So before next week, I'll try to make sure that I get my color code set up properly, and hopefully we can get back on track and back on a normal schedule. But I would at least make sure I get the videos out, since I know when I was in New York it didn't happen so much, and everything got messed up. But anyway, so we have the 155 strike price. We're currently underneath that 2%, and we're looking at a possible upside of 42 cents for Abney. Then we have AIYY. We have two short calls, $30 strike and $30.50 strike. As of close yesterday, we were under the $30 by 4 cents and by the 30.50 by 54 cents. So we don't have much upside here as far as for the short call. We only have about 20 cents. If we have AMDY, short call, $182.50 is our strike price for Friday. We are currently over that $1.46, or as of close yesterday. So all this data will be as of close. So I didn't say the date, so let me look at the calendar, because I know I'm off. Okay, so these are for July 10th. For Wednesday, July 10th. All right, so at the end of the day, we're at 183.96, which put us over $1.46. So clearly no upside for the short call. However, the stock could still go up based on the market values, the differences, on how the synthetic moves, or the value is, or the short call value. And that will be the same for all of these. All right, so let's move on. So we have AMZ here. Oh, and you know what? Because I didn't have close on those other ones, I forgot to look. Okay, so we have no trades here on AMZ, but we have two short calls that expire on Friday, 202.50 and 205, and we're underneath those 1% and 3. And we're looking at a possible upside of about 50 cents here for the short calls. For Apley, we had no trades. We have a short call with a 230 strike for Friday. We're over that $2.98 as of close yesterday, so no upside here for the short calls. Then we have Coney. We do have some trades here. They added 800 contracts to the synthetic and created a new short call here with a $227.50 strike price. This will not expire till next week, and we're currently underneath at 3%. We also have the 230 and the 235 strike price, and we're under those 5 and 7%. Majority of the contractors still sitting at the 235 strike price. So a possible upside there, I don't know, somewhere $1.15, $1.20 for the short calls for Coney. Then we move on to Dizzo. We can see there's no trades for this. We do have a short call that has $100 strike price for Friday. We're currently entered at $3 or 3%. Gives us possible upside of about 52 cents here for the short call. But also note that we have our synthetic position that expires next week with a strike price of $105, and we're currently underneath that 8%. And as you can see, that's not a good thing, which is why that is red. You can also see over here on the right-hand side, if you're not used to seeing this, that this synthetic is actually bringing the Dizzo stock down $1.36 a share. So then we'll move on to Phoebe. They added 35 contracts to the synthetic and created a new short call that will expire next week with a 555 strike price, which are currently under 4%. We also have the 550 strike price for the short call that expires this Friday, which we're under 3%. And we're looking at a possible upside of about 55 cents for Phoebe for these short calls. Then we have GDXY adding 240 contracts to the synthetic and creating a new short call that will expire next Friday with a $38 strike price, and we're currently underneath that 3%. We also have the $36 and $37 strike prices. The $36 strike price, we are over 3% or $1.05, and this is also where the majority of our contracts are. The $37 strike price, we're over that 5 cents. No possible upside here for our short calls themselves. All right, so then we have GUI. We had lots of buy-ins yesterday. Man, I feel like I've missed out here this week in the market. But anyway, we were, for GUI, they added 65 contracts. They added 65 for the synthetic, and then they created, that's interesting. I don't know why. I'm wondering if this is a typo. I would think this is a typo, but maybe not. I don't know. But looking here, we already had a short call that expires next week, which is the last one they did, at a 195 strike price. So you would just assume that the one with the new 65, that they would put it on next week's, or they would put it, it would do the same as this position and not do it for this week. So I guess we'll see if this one actually expires this week or if they end up combining it with this one later. But that is sort of odd. So anyway, it's the same strike price. It's just going to expire this week instead of next week like our other one. So we're currently under that 195 strike price by 2%. We also have the 192.50 strike price. It's going to expire on Friday, and we're below that by 1%. The majority of the contracts are at the strike price of 195 that expires next week. I don't know. We may have about 10 cents or so upside for the short calls. It's not going to be a lot. Actually, maybe about 20 cents. But anyway, let's move on. We have JPMO here. They added 30 contracts to the synthetic and to the existing short call, which is $215, which we're underneath 3%. Looking at about possible upside of 66 cents there for JPMO. Then we have Murney here with no trades. We have two strike prices, 121 and 122, that will expire on Friday. We're currently below those 3 and 4% and looking at about 55-cent upside here for Murney for the short calls. MSFO, we have no trades. We have 3 short calls that expire on Friday with a $467.50 strike price, which we're under $1.25. Then we have a 470 and a 475, and we're underneath those 1 and 2%. We're looking at upside of possible 38 cents here for the short calls for MSFO. make sure where I'm at. I don't want to accidentally skip some. I did that yesterday. And then I had to go back. Okay, so we have Misty here with no trades. We do have 2 short calls that expire on Friday. We have the 1380 and the 1410 strike price. Now, this morning they have announced a, I think 10-for-1 split that will be effective on August 1st. So as of this morning, this stock is over 1400. Well, it was over 1400. Then something happened and the market started going down, and it's going down. I'm missing something while I'm recording this video. I'm missing some buying opportunities. Bitcoin's even going down, so I'm not even sure what just happened. Index pullback follows fractionally lower inflation. 11 minutes ago. I guess that came out afterwards. Dang it. So I'm missing something, but it's okay. Anyway, we're still almost at $1,400, but we are over that first strike price by a few dollars at this point. So these are going to be hard now for this week, and maybe they'll close these out today. I don't know, but you know, it's possible that these will go up with the news of the reverse split, you know, similar to NVIDIA, because they were so expensive. And to me, most of it, I think, is a mental thing, unless you're an account, unless you have brokerages that don't allow you to trade fractional shares. Otherwise, you know, if you do, it's more of still a mental thing. Buying, you know, 1/10 of a share or buying one whole share, you know. Like, you would prefer to buy, you know, 10 shares at a lower price versus 1 share at a higher price. And, you know, I don't know. It's, like I said, it's a mental thing. But I'm sure there's a lot of, I'm sure there still are some brokerages out there that don't do fractional shares. Or they have some stupid rules or something for you to be able to trade the fractional shares. But anyway, so yeah, with that said, since they are basically at those strike prices, I'll tell you where Misty is to go along with that, because I can't tell you what the upside is because it's already past it. Yeah, it's at $26.22. So it looks like it went up $1. And it could still go up more. It's only right past the 1380 strike, so it's not back up to the 1410. Trying to look here, 1 minute. Yeah, but Misty did get all the way up to 2670 earlier before it came back down, and that was around when it was at 1410. All right, so we will move on from this, but also just a reminder that the synthetic does expire next week. So actually, this is probably good because we want the MicroStrategy MSTR stock price to be above that 1550 for next week, because our synthetic expires. Right now, we're down $4.37 due to this synthetic, but if the stock keeps rising, if it can rise above that 1550, we'll be setting pretty. Right now, though, if we had to sell that synthetic today, it would cost $61 million. Well, I say sell. Let's say to close out, because we have 2 different positions here. But anyway, okay, we're going to move on to the next one. We have Nephilim here, so we did have a closed position. So let's look at this. So it looks like they went ahead and took care of the one short call that was going to expire this week. And so you can see that on the first line, the one that was going to expire on July 12th, which is Friday, with the 705 strike price. They closed that one out. Costs $1.15 a share to close out. And this is where I don't have the data anymore with the way these are moved. So it looks like, because yesterday we were at 685, or sorry, yesterday we were actually at 677. The day before we were at 685. And then of course they had a couple of days, so that's why it's a little bit higher. I'm not sure why they didn't wait until it was cheaper to sell that. I guess they figured it didn't cost that much money overall. It was only $100,000, but I don't know. But anyway, they've rolled that to next week with a 740 strike price now. Yeah, for all the contracts. So let's, oh, I did not mean to do that. My apologies. All right. So for the holdings. All right, so you can see that here, the new short call for next week, 740 strike price. We're currently under that 8%. So what did I miss? Maybe there's earnings on this one next week. I need to really gather all the earnings stuff. I just posted this morning. I knew earnings was coming up, but I just, everything's been going on. So our first earnings starts, which I should have said it with JPMO for those that only watch the JPMO section. JP Morgan Friday always starts us off with earnings. I don't recall though if it was, it probably is pre-market because it's on a Friday. It's very rare that we have earnings on the afternoon of a Friday. But anyway, I don't know. I'll have to look to see when earnings are for the rest of these. Actually, it's bugging me. I just don't know why we're up that much. So let's look. Netflix. Or why they did close the option out early and then did it way up. And wow, we are at 662 today. Like as of right this minute, we're at 662. So there was they shouldn't have closed out that other position so early. I say so early, it was just a few days early. Post-market earnings released on 7/18. So next Thursday, earnings will be released, so that's why they have the strike price even higher with the expectation that they may do good. Of course, at this point, we're $80 above or below that. But anyway, it shows, as of yesterday's price, we would have possible upside of $1.46 for the short calls, if we could get up to that 740. So let me look back at that. If we could get up to the 740, that gets us up to about 1880. So it'll get us back going in the right direction. All right, so then we have NVIDIA here. Okay, so let me see. So we had no trades. We have 2 short calls expired this Friday with a 132 and 133 strike price. As of close yesterday, we were almost at 135. That means that we were over both of these strike prices by roughly $3 or $4. No, 35, $2 or $3. We're above 1 or 2%. So no upside here for the short calls, but could possibly still go up based on, the synthetic value. But you can see here yesterday that NVIDIA only went up 38 cents while NVIDIA went up over $3.50. All right, so let's go to OARC. We have no trades here. And then, okay, Snowy was our other closed one. With the short call that expires Friday with a $46 strike price, we were underneath that 5% yesterday. And that's pretty much it. Let's move on. Hold on. I said 5%. 5 cents. 5 cents. So then we have PayPay with a short call that expires on Friday with a $61 strike price. We are currently under that by 3%, which is actually $2.10. Possible upside of 54 cents here for the short call for PayPay. Man, it's raining, but I know I hear roller coasters out there going. Okay. Anyway, we have our synthetic positions that expire next week. 67.50 strike price. We are currently underneath that 13%. It's bringing the stock down $2.21. Then we have Snowy here. So Snowy closed out a position. So let's go see what happened, because I still see some short call there. So Snowy, they had a 147 strike price, and this one's a 146. All right, did they forget about that one? So this was the higher one, and then we're low. So we went, our stock price has gone down to 137. Well, that sucks. All right, anyway. all those times you hold on to stock, you're like, oh, I'll just wait, it's going to go up more. And then it doesn't. All right, so they paid 9 cents a share to close those out. And then you can see here for this next week, we went from a 147 strike price to a 143 strike price. So it expires next Friday, July 19th, and they received $1.52 in premium. All right, so then we go over here. We can see where they've rolled that to next week with the 143 strike price, which are currently under 4%. Then we have another one here with the 146 strike price. We're underneath that 6%. So this one's weird because this is $1.17 and the other one says 62, but the other one is the lower dollar amounts and the one with the majority of the stocks. So I think we're looking at about more of the 62-cent upside to get up to the 143 strike price. But that would be, again, just for the short calls there. All right, let's move on. So we have SQUE here with no trades. We have a short call that expires on Friday with a $66 strike price. We're currently underneath that 3% with a possible upside this week of 48 cents for the short call. But then we have a synthetic position that expires on next Friday with a $70 strike price, which are currently under 8%. It's bringing the stock price down $1.62. Then we have Tesla here with no trades, but we do have a short call that expires next week with a $275 strike price, which are currently under 4%. And we're looking at about a possible upside of 74 cents. So that's pretty cool because we can get that 74 cents with the 17.27 where we was at yesterday. That gets us up above $18. So it's nice to see these levels going up. Of course, yeah. I mean, I still sold a few of mine on Declaration Day. But we're still not back to that level yet. Of course, once we start getting above 18, then I might start regretting it. But, oh well, right? It is what it is. So then we have Zomo here, no trades. We have 3 short calls that expire on Friday, 113, 115, and 117 strike prices. We're underneath those 1, 3, and 4%. The majority of the contracts are sitting at the 115 strike price. And it looks like we have about a 42-cent upside for these short calls for Zomo. That would get us over 17. Okay, so then we had Crash. We did have some sales. Let's see what we had. So Crash here, they closed out the synthetic that was going to expire next week. And our new synthetic is going to expire in August. And we went from a 170 to a 260 strike price. So this, as part of the synthetic here, let's see what this one is. So the call cost us $95.31 a share here. $2.8 million. Yeah. So if we look at that, it costs $2.6 million to close these out. Or to roll them. So when we look over here, we can see those new lines there, the new synthetics. And our short puts that we have that will expire this week, we have the 230 and the 237.50 strike prices. And we're currently over those by 11 and 14%. As far as this long call that they did the other day, I think it was the other day, I'm not sure exactly why they made this expire for next week versus doing it out further. But we still had that hanging there. And then, I don't know. I'm not exactly sure why they did that. But anyway, all right. Maybe it's going to be a new method. What they've been doing is the long call option has been the same date as the synthetics. Of course, they moved that long call. Or they changed it the other day. It might have been just you know, it was probably just the, 265 to 400 strike price move, and they probably kept it at the same expiration. So then it makes you wonder why they didn't just go ahead and knock it out with this one, move it to. But anyway, I don't know. I'm sure one of you have an answer for that, just not me. I apologize. I'm not fluent in all of that data. All right, then we have Fiat, our new one here. We didn't have any trades yesterday. So you can see here what I was talking about. The synthetic and the long calls have the same expiration date. But anyway, we have a short put for next week with a 212.50 strike price. And coin is at just shy of $220. So I realize I don't have the percentages in here, and I don't know why. So hold on. Do I need to hide some things here? Oh, I guess it wasn't much. So let's see. Maybe I just don't have. I don't know why I wouldn't. Oh, this isn't going to be right when I copy it, I almost guarantee. I was doing this on my phone in the amusement park the other day. I was like, oh, I'm just standing here. I'll do some work. I mean, it's really hard to do it on the phone. Just saying. So I can copy this over, but this is going to give us the data for today and not as of yesterday. So you'll see here that we are 6% over the 212.50 strike price. All right, and the other thing I guess I should do, because I don't have this for these, like sitting there thinking, did I not do, I thought I've already covered Fiat at least once, and if so, I don't know why I didn't catch these other little things, unless I didn't change it. I changed it on the dated tab and not my original tab. But I would say, I think I do remember talking about this, because I was saying be very careful with this, because you've seen what's happened to crash, and we're down to $12. This is headed straight to reverse split. With Tesla taking off like it did, it crashes just, man, it's crashing bad. With Bitcoin being down as low as it is already, we're at 50-something thousand, and if we get up back, start going back in the 60s or 70s, I feel like Fiat's going to be crushed too, the exact same way got crushed. So I don't know. I don't know about these two. We all waited for them, couldn't wait for them to get here, but now after seeing what just happened to crash the last couple of weeks, it actually has done worse than Ulti. Right? Of course, it all depends on, the underlying and all this stuff. I understand that, but just please be careful here with these. All right. Anyway, so we've talked about Fiat. So let's go to YBIT. So that's our last one here. So we did have trades. So let's see if we had any closed ones. I don't remember. We did not. All right. So YBIT here, we have, they added 500 contracts to the synthetic, and created a new short call for next week with the $21 strike price, which are currently under 4%. Then we have the short call for this week that expires on Friday with a $20.50 strike price, which are under 2% or 41 cents. Currently, we have a possible upside of 31 cents for the short calls for YBIT. All right, guys, I'm going to let y'all go. Thanks for hanging out with me. Thanks for all your support. It's greatly appreciated, and I'll talk to you later. Bye.